All right, let's talk taxes. You know, most people think of the US tax code as this giant, scary rule book. But what if I told you it's actually a treasure map? Yeah. Most of us, we just stick to the main, well-worn path. But today, we're going off-road. We are on the hunt for some serious hidden cash for the 2025 tax year. This is money that is rightfully yours, but so often gets left behind. So you ready to start digging?
So what's up with this big number on your screen? $3,000. Well, get this. That's the average amount of money Americans just give away in overpaid taxes every single year. Seriously, it's not a donation to a good cause, it's a blind spot. And believe me, that blind spot is costing you.
So let's make this personal for a second. Is that your $3,000 sitting on the table? Think about it. Are you basically writing the IRS a bonus check every single year that you absolutely did not have to give them? Okay, yeah, we're gonna fix that, starting right now.
Okay, we are about to dive into 7 of the most commonly missed, most overlooked tax deductions out there. These are the secrets that can help you get that $3,000 back in your pocket. But listen, before we can actually find the treasure, we need the key, right? The one that unlocks the chest. And that key, my friends, is a simple 3-letter acronym, AGI. If your tax return is the map, then your AGI, your adjusted gross income, is that little red "you are here" dot. It's the starting point. It literally determines which paths you're allowed to take and which treasure chests you can open.
So what is it really? Simply put, your AGI is your total income after you subtract some really specific, powerful deductions. And here's the magic part. The lower you can get that AGI number, the less tax you pay. It's like a domino effect of savings, because a lower AGI can actually qualify you for even more tax breaks down the line. It's a huge deal.
Okay, so there are basically 2 main paths you can take to save money. On one side, you've got what are called above-the-line deductions. Think of this as the VIP express lane. They slash your AGI directly, and you don't have to go through the hassle of itemizing. Then, you've got the itemized deduction route. This is for the super savers who have enough expenses to beat the standard deduction. We'll touch on both, but honestly, we're going to spend most of our time in that powerful express lane.
All right, first up, this is a whole treasure chest just for you gig economy warriors out there. I'm talking to the freelancers, the contractors, the side hustlers, the entrepreneurs. If you're not getting a regular W-2 paycheck, you need to lean in close for this.
Okay, this first one is an absolute game changer. It's the self-employed health insurance deduction. And let me be clear, this is not just another medical expense you list somewhere. No. This is a direct shot, an above-the-line deduction that lowers your AGI. You can write off 100% of your premiums. The only catch? You can't be eligible for a plan from an employer or, say, your spouse's employer. So definitely double-check that, but whatever you do not miss this one.
Ah, the home office deduction. I know, a lot of people are kind of scared of this one. They think it's an audit red flag. But look, if you have a space in your home that is used exclusively and regularly for your business, you should be claiming it. Period. You basically have 2 ways to do it. There's the simplified method, super easy, gets you up to $1,500, or you can do the actual expense method. It takes more record keeping, sure, but the payout could be way bigger. It's totally your call.
Are you driving around for your business? Because if you are, every single mile is literally money back in your pocket. We're talking trips to meet clients, runs to the supply store, even driving to the bank for your business. It all adds up. But what's the secret? You gotta track it. Don't just guess at the end of the year. Please, just download a mileage tracking app on day 1, set it, and forget it. You will be shocked at how much you save.
Okay, let's shift gears for a minute. You might be thinking, well, that's great for the self-employed folks. Well, what about me? I've got a regular 9-to-5 and maybe some investments. Don't you worry, because there is absolutely hidden treasure for you too.
Okay, listen up, because this next one is brand new and it is a really big deal, especially for our hourly workers out there. For tax years 2025 all the way through 2028, there's a new deduction on the books, and it's all about your overtime pay.
So here's how it works. You know when you get time and a half for overtime? Well, that extra half part of your pay, the premium part, you can now deduct that. And yep, you guessed it, it's an above-the-line deduction, so it directly lowers your AGI. If you're someone who puts in a lot of overtime, this is just a massive win for you.
Okay, let's talk to the investors for a second. Let me just say this. Stop paying tax twice on the same money. You might not even realize you're doing it, but it's a super common mistake, and it can be costing you a ton. So how do you avoid this double taxation trap? The secret is all about understanding a term called cost basis. All that means is the original price you paid for an investment.
Now, here's the key. When you get dividends and you reinvest them, that money increases your cost basis. It's like you're updating the price tag, which is a very good thing when it comes time to sell.
Let me walk you through it. Step 1. You get a dividend from one of your stocks. The government makes you pay tax on that dividend income. Okay, fair enough. Step 2. You reinvest that dividend, which buys you more shares. That action automatically increases your cost basis. So, step 3. Down the road, when you finally sell those shares, your taxable profit, your capital gain, is smaller because your starting cost was higher. Smaller profit means you pay less in taxes. See? It's simple, but so many people miss it.
All right, we're heading into the home stretch. And for our grand finale, I've got 2 deductions that are pretty much universal. It doesn't matter if you're self-employed, a W-2 employee, or retired, almost everyone can get in on these.
Let's talk about the good old traditional IRA. This is the ultimate win-win scenario, folks. You're doing the smart thing by saving for your future, for retirement, and the government gives you a tax break for it right now. It's another one of those amazing above-the-line deductions that crushes your AGI. For 2025, you can put in up to $7,000 or $8,000 if you're 50 or older. And get this, you have until April 15th, 2026 to make your contribution for 2025. But my advice? Don't wait. Start early.
Are you a generous person? Do you give back to your community? Well, your good deeds can actually be good for your wallet, too. Now, this one is for those of you who itemize your deductions. But listen, if you're driving your car for volunteer work, you can deduct the mileage. For 2025, that's 14 cents a mile. If you bought ingredients for a charity bake sale or a uniform for volunteering, deduct it. Just keep a log, keep your receipts in a folder. Every single dollar counts.
Wow, okay, that was a whirlwind tour through some of the hidden corners of the tax code, wasn't it? So now let's put it all together. Let's create your personal blueprint for finding that extra $3,000. Here it is, your Power Play cheat sheet. These are the big ones that lower your AGI. If you're an hourly worker, you have got to grab that new overtime deduction. If you're self-employed, the health insurance write-off is non-negotiable. And for literally everyone listening, the traditional IRA contribution is just a complete no-brainer. These are your heavy hitters.
You see, the tax code doesn't have to be this big, scary puzzle. It's a playbook. And now, you know some of the most powerful plays. So the only question left is, where are you going to find your savings? You've got the map, go find your treasure.